Welcome to the Deep Dive. Today, we're cutting through the noise, taking a close look at the first half 2025 results for Symrise. They're a global leader in those, fascinating worlds of flavors, fragrances, and nutrition.
Right. And what's interesting here is their earnings call actually happened while the markets were still open.
Yeah, that always adds another layer, doesn't it? You get that immediate investor reaction. So our mission today is to unpack these results, figure out the market's response, and really give you the full picture.
Make sense of it all.
Exactly. So you can walk away feeling truly well-informed. Okay, let's kick off with the headline numbers then. Symrise reported earnings per share of 1.92.
Which actually beat consensus estimates.
Yeah, by a healthy 2.7%. And their adjusted EBITDA, that key measure of core operational profitability.
For interest, taxes, depreciation.
Right. That came in strong at $554 million.
Mm-hmm. Pushing their margin up to 21.7%. That was a 50 basis point beat.
0.5% better than expected. Even their free cash flow looked pretty healthy.
Yeah, $226 million, about 8.8% of sales.
So on the surface, some really positive profitability signals, wouldn't you say?
You're absolutely right. Those profitability metrics, they largely impressed.
Yeah.
But the market's reaction, that told a very different story.
Oh, okay.
While Symrise did beat on earnings and margins, their revenue landed at $2.554 billion. That actually missed consensus estimates by 1.7%.
Okay, so a miss on the top line.
And here's where it gets a little nuanced. Despite achieving 3.1% organic growth, that's growth from existing operations, excluding currency effects or M&A.
Right.
Their reported revenue is actually down 0.5% year over year.
Oh, interesting.
And this top-line miss, combined with some updated guidance we'll get into, it definitely seemed to overshadow the positive margin story for investors. Sparked a pretty cautious immediate sell-off.
Okay, so the headlines. Profitability beat, revenue missed, investors got cautious. Let's dig in. What's the story behind those numbers? What's the full financial picture that sparked such a strong reaction beyond just that top-line miss?
It's a compelling contrast, really. Beyond those initial headline figures, net income increased by a significant 12% to $268 million. That's pretty solid.
12%, yeah.
And even more notably, their gross profit margin improved to 41.4%. That's up a substantial 250 basis points from last year.
Wow. 2.5% increase on gross margin.
Exactly. And this isn't just a minor tweak. These improvements were primarily driven by enhanced material utilization and those recurring cost savings they're getting from their efficiency programs. In fact, they realized $20 million in savings just in the first half.
Okay.
So it shows management's ability to pull levers on profitability even when that top-line growth softens a bit.
And these savings, they're part of that broader One-Symrise transformation journey, right? I know the CEO, Jean-Eath Parasot, talks about it a lot.
Exactly. He described this as being in the activation phase of a multi-year transformation. The One-Symrise strategy is really designed to achieve, durable, profitable growth, generate strong free cash flow, and deliver compounding returns over time.
Right.
These cost savings are a direct result of streamlining operations, optimizing processes, improving procurement, across the board, really.
Makes sense.
And as part of this push, they've also been strengthening their leadership. Couple of key appointments. New president for Scent and Care, new SVPs in global ops and procurement.
So a real top-down effort to drive that efficiency.
Absolutely. Focusing on what they can control, especially now.
So diving deeper then, performance by segment, by region. Where did Symrise actually see strength? And where were the headwinds? This should give us more color on those top-line numbers.
Right. In the Taste, Nutrition, and Health segment, organic sales grew by 3.3%. Their Food and Beverage division was a standout, actually. Showed industry-leading mid-single-digit growth, mostly driven by higher volumes. Seems people are still spending on food and drinks.
That makes sense.
However, pet food, that division maintained flat organic sales.
Flat.
Yeah, reflecting cautious consumer sentiment, particularly in pet nutrition. Price adjustments are still ongoing there.
Even pet food feeling the pinch.
Seems so. Even segments that often feel recession-proof are showing some strain. Then, moving to the Scent and Care segment, it grew a solid 2.9% organically.
Okay.
Strong performance in fragrances, especially fine fragrances, so people still treating themselves to luxury scents, it seems.
A little indulgence.
Right. And there was also a noticeable recovery in aroma molecules.
Yeah.
But their cosmetic ingredients division faced tough year-on-year comparables.
So they were up against a really strong period last year.
Exactly. Makes growth look harder this year.
And regionally, it sounds like North America might have been a bit of a drag. We've seen that elsewhere.
You're spot on. Latin America was the real standout, actually.
Yeah.
Impressive 10.6% organic growth.
Wow.
Maybe stronger emerging market demand or specific product hits there. Both Asia Pacific and EMA also delivered good growth, over 3% each.
Okay.
North America, however, slightly negative organic growth, 1.4% down.
Right.
Management put that down to those persistent macroeconomic uncertainties, inflation still biting, and regulatory unpredictability. They were keen to emphasize, though, that this isn't just a Symrise issue. It's more reflective of the broader, tougher market in North America right now.
Okay. Highlights the uneven global picture. Shifting gears a bit then. Guidance. What are they telling us to expect for the rest of 2025? This is often the big thing the market keys in on.
Yeah, and this is a critical point, definitely contributed to that market reaction. Management is moderating their full year 2025 organic sales growth forecast, bringing it down to a range of 3-5%. It was previously 5-7%.
Okay, so a definite cut on the top line expectation.
A clear cut. However, on the profitability front, they're actually raising their full year EBITDA margin expectation.
Raising it, despite the sales cut.
Raising it to approximately 21.5% from around 21%. And that's directly driven by those strong cost savings we talked about. The full $40 million in savings identified for 2025 is still expected, with the other $20 million coming in the second half. And they're also maintaining a robust objective for free cash flow, around 14% of sales for the full year and over 14% longer term.
So it's fascinating. Management is clearly stressing margin, efficiency, these self-help things. But the market, initially anyway, is fixated on the slowing growth. How does their broader strategic storyline, that One-Symrise thing, fit into this divergence? It feels like two different conversations.
That's a perfect way to put it. Their One-Symrise strategy is clearly built on 3 pillars: portfolio, growth, and efficiency.
Okay.
On portfolio, they're actively managing it. Proactive portfolio management, they call it, which means optimizing what businesses they're in, divesting non-core assets like their aquafeed business, exploring strategic alternatives for their terpene aroma intermediates.
Shedding the less profitable bits.
Exactly. Sharpening focus on the higher margin segments. For growth, they're still investing heavily in innovation. R&D spend is near 6% of sales. They highlighted some exciting new platforms: biodegradable UV filters, biotech fermented vanilla, slated for launch around In Cosmetics 2026.
So looking further out for growth drivers.
Yeah, and these aren't just small tweaks. These are potentially new, premium products offering real differentiation, better pricing power. And finally, that efficiency pillar. It's all about operational excellence, locking in those cost savings we discussed, aiming for sustainable margin expansion. It's a clear roadmap, shifting towards higher margin stuff.
Okay, here's where it gets really interesting, the market reaction. The share price slid over 10% by the closing bell that day.
Huge move.
Yeah, and trading volume was twice the 30-day average. That signals significant selling pressure. Plus, we saw a triple spike in put open interest on the 75 and 70 September strikes.
Right. For listeners, put options give the holder the right to sell stock at a set price. So a spike suggests more people betting the price will fall further.
Exactly. So what does this all mean in the broader investor landscape, this sharp reaction?
Well, if we connect it to the bigger picture, Symrise was already underperforming the StereoXX Europe 600 Chemicals Index over the last month, 3 months, even the past year.
Okay, so context matters.
Definitely. And their peers, Givaudan, IFF, they've also reported soft volumes. So there's a wider cautious sentiment in the sector, especially around discretionary stuff like fragrances, which raises that key question. Why such a sharp sell-off when they beat EPS and raised margin guidance?
Right.
It seems to boil down to that narrative battle. Management emphasizing pricing power, margin expansion through self-help. But the market, its immediate focus was just laser-like on that decelerating top-line volume and the guidance cut.
Management story versus the market's focus. How often do we see this kind of disconnect, and what does it usually signal short-term?
Oh, we see it quite frequently, especially when there's macroeconomic uncertainty floating around. Management tries to paint the full picture, strengths, strategy. The market, though, often zeroes in on one thing, often the negative. And in this case, it was clearly that growth slowdown.
Right.
When growth disappoints, even if profit holds up, investors can react pretty severely in the short term. We saw buy-side funds trimming positions. Hedge fund flow actually skewed short. Clear bearishness.
Given this mixed bag, then, results, outlook, market reaction, what are the analysts saying? Is there a consensus view emerging, or are they split?
They're quite divided, actually.
Yeah.
reflects the complexity here. JP Morgan, for instance, maintains an overweight rating. They acknowledge the sales cut was deeper than feared, but they find the self-help stuff credible, giving management the benefit of the doubt, perhaps.
Okay, benefit of the doubt.
UBS has a buy rating, 115 price target. They noted organics were half what the market expected, but they think the story is intact if demand stabilizes, betting on recovery.
Contingent on demand stabilizing.
Exactly. Then you have Jefferies on the other side. Underperform rating, 90-year price target. They're citing concerns about inventory build, a softer second half. They prefer peers right now.
Underperform, okay.
So yeah, a whole spectrum of views, from belief in the long-term strategy to skepticism about the short-term demand.
So looking ahead, what should investors, or really anyone watching this space, keep an eye on? What are the key catalysts for Symrise? The next big data points?
Several crucial milestones coming up. The Q3 statement, that's October 28th. That'll give more clarity on how they're executing on that raised margin guidance.
Okay, Q3 results.
Then there's the November West Coast Roadshow. That'll be key for getting early order trends, especially for holiday fragrances, big for scent and care.
Holiday season impact.
Right. Longer term, keep an eye on regulatory verdicts. That new microbial UV filter from the EMA, expected Q1 2026. That could be significant, opening a new high-value market.
Also,
Any potential M&A in natural colorants and just broader macro signals on consumer spending, particularly discretionary.
makes sense.
The whole multi-year strategy is about shifting that narrative, right? From margin defense today towards growth reacceleration as they move into those higher margin ingredients. That's a long game.
All right, let's shift gears to our This Is Not Financial Advice segment, where we pitch an outrageous but plausible trade idea based on today's deep dive. Given everything we've discussed, what's the bold play you're thinking of here?
Well, given that significant stock reaction, that big drop and the strong put activity, there's clearly a major divergence in sentiment. You've got the market reacting negatively, but management pushing hard on profitability, efficiency, raising margin guidance, maintaining strong cash flow targets.
Right.
Plus, they're actively divesting non-core bits and have these innovative, higher margin products lined up for 2026. So while the market is selling off the growth downgrade now, the company's core profitability and that strategic transformation seem pretty robust underneath.
So what's the tactical play for someone who buys into that longer-term story?
Okay, again, not financial advice, but consider buying out-of-the-money call options on Symrise with a Q1 2026 expiry.
Calls, betting on the price going up, out of the money, so a bigger move is needed. Q1 2026 expiry gives it time.
Exactly. The thinking is the immediate market reaction might be an overcorrection on that top-line miss. It could be overlooking the impressive margin expansion and those longer-term catalysts, like the new UV filter verdict or the strategic shift. This trade really banks on management executing successfully on One-Symrise.
If they deliver.
If they deliver on profit growth, it could eventually rewire that investment narrative, potentially triggering a significant rebound from these depressed levels, especially if global demand firms up and those new innovations gain traction. It's basically a bet on the long-term strategic story winning out against this short-term volume anxiety.
And that's our deep dive into Symrise's latest earnings. It's truly a fascinating study, isn't it? Market perception versus strategic execution. While top-line growth moderated, that focus on margin expansion, strategic shifts, it's clearly underway and seems to be gaining momentum internally.
Yeah, the company is definitely pushing through a significant transformation, streamlining, focusing on high-value innovation, all while navigating a pretty tricky global demand environment.
The critical question for you, the listener, really remains: will management's self-help, their internal levers, ultimately outweigh the market's current worries about top-line growth in the coming quarters? Or is the market right to be cautious right now?
As always, please remember, everything discussed here is purely for informational purposes. It is absolutely not financial advice. We hope this deep dive helps you feel more informed, better equipped to think critically about this company and its results.
Yeah, and we always love hearing your thoughts. Feel free to share your own insights on Symrise's latest quarter.
Until next time.